Assalamu alaikum. Continuing our series of reviewing investment funds that are catering to Muslim investors. In this video, we're going to review the Amana Trust Growth Fund, ticker symbol AMAGX. The Amana Fund is one of the OG funds in the halal investment space. Its inception goes back to 1994, and it has more than $2 billion in assets under management. Now, unlike the Wahed Invest ETF and Sharia Portfolios ETF that we reviewed previously, the Amana Investment Fund is an actively managed fund, meaning they aren't just trying to follow an index, rather there are investment decisions that are being made by the fund's managers. And actively managed funds will typically have higher expense ratios, and indeed Amana has a 1.03% annual total expense ratio. This is compared to 0.5% for Wahed Invest and 0.49% for Sharia Portfolios ETF. As for Amana's investment style, they describe it on their site as targeted to investors seeking long-term capital growth. They also describe the companies they invest in as generally large cap, but can invest in any capitalization of domestic and foreign stocks. Whereas Wahed and Sharia Portfolio each had hundreds of holdings in their ETFs, Amana's investment fund has around 30 holdings in their actively managed fund, actually 33 to be exact. Their top 10 holdings represent around half of their fund's allocations. Apple is the largest holding in the Amana fund. The next two biggest holdings are software companies, Adobe and Intuit, and their fourth largest holding, ASML. Probably most of you haven't heard of it, but they build the machines that build computer microchips, basically. They have a fairly reasonable amount of diversification in their portfolio, so their investments are distributed in various sectors, but they are most heavily weighted in technology stocks. Now, as for the halalness of the Amana Investment Fund, I reviewed their 33 holdings. None of these holdings stood out to me as being particularly objectionable from a halalness standpoint. There is one particular stock that I probably wouldn't feel comfortable investing in, and that stock is Lowe's. Lowe's is a retail company specializing in home improvement equipment. It is the second largest hardware chain in the United States after Home Depot. The reason why I wouldn't feel comfortable investing in Lowe's is that back in 2011, Lowe's pulled their advertising from a show that was attempting to portray Muslims in a positive light. To be completely honest here, the show itself was a cringe fest with zero entertainment value. But the intentions behind the show, I think, were good. And they were basically trying to tackle some stereotypes about Muslims in the United States. This upset some lobbies that don't want Muslims to necessarily be portrayed as normal people. So these upset lobbyists started to lobby the advertisers on the show, and Lowe's responded to these lobbyists and pulled their advertisements from this show. Now, while it is perfectly within Lowe's right to advertise wherever it wants, it is also within the Muslim community's right to express their disapproval with what Lowe's did. And one of the most effective ways to express their disapproval is with their consumer and investing dollars, at least until Lowe's issues a clear apology for what it did. And now, I know some people are gonna say, hey, Rakan, it's been 10 years, you should probably let it go. And normally I'm of this opinion, but I do also think that if Muslims want to be respected and want to be accounted for, then they shouldn't have such short memories. They should remember the companies that are treating them unfairly and that are responding to bigotry and accommodating it, and they should voice their disapproval. As I mentioned, one of the most effective ways to do this is with their investing and spending dollars. Plus, I don't even think Lowe's is the best company in the space. I think Home Depot is a better company than Lowe's is. So if I was Amana, I would liquidate that 54 million that Amana currently has invested in Lowe's. I would liquidate that position and buy Home Depot instead, or I would buy Tesla, since I noticed that Amana doesn't have any Tesla in their portfolio. So that way, Amana can improve their expected returns and help save the planet by investing in Tesla and stand up to bigotry all in one fell swoop. Now let's move on to performance. I want to compare the performance of the Amana Investment Fund with the performances of Wahed Invest's Halal ETF and Sharia Portfolio's SPUS ETF. In this chart, we have the year-to-date performances for Amana in red, Sharia Portfolio in green, and Wahed in purple. We can see that Wahed's Halal ETF has lagged the other two funds since the start of the year. I think this will continue for some time as Halal contains small, medium, and large cap stocks, and I expect large cap stocks to generally outperform given the economic uncertainty we are facing. Now, Sharia Portfolio and Amana both focus on large cap stocks, and you can see their performances really start to separate from Wahed's performance since the March lows in the market. Currently, Amana has Sharia Portfolio beat by around 2 percentage points after fees, but it really depends on when you decide to make your comparison. So Sharia Portfolio's ETF had Amana beat in the beginning of the year and at some points in May and June. Moving forward, it's hard to predict who will outperform Amana or Sharia Portfolio's ETF, given that Amana is an actively managed fund and their performance will depend on the investment decisions that they make. So if you're not a fan of active investing and think that indexes will tend to outperform over the long run, then you may find Sharia Portfolio's ETF more attractive to avoid Amana's management fee. On the other hand, if you think active investing is the way to go, especially in times of crises, then you're probably going to find Amana more attractive. So that was my review of the Amana Trust Growth Fund, ticker symbol AMAGX. I hope it was useful, and if it was, please leave a like and subscribe. If you earn more than $200,000 annually and you would like to invest some money with yours truly in a unique asset class that has exhibited zero correlation with the overall market and has had risk-adjusted returns that are superior to all the other major asset classes since our inception in 2017, then go to fundmebff.com and apply to become an investor, or just click on the link in the description below. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.